Welcome to Sand to Pearls Stock Market Commentary for market week ending Friday, May 16th, 2014. Market breadth. With this past week's market fractional rise, our bull-bear point and figure ratio fell from 0.87 to 0.85, continuing within bearish territory. The total count of securities in bullish or bearish patterns fell 2% to 2,045. The count of bearish stocks decreased 1%, while the count of stocks in bullish patterns decreased 3%. The Sand to Pearls P&F Market Breadth Summary Chart shows us a market now 2 consecutive weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership and clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 66 points for the 19th decline in 39 weeks. At a negative 549.58 points, it continues below all 8 tops above plus 100 and below the July 2012 low, and has now fallen below the December 2011 low, but continues above the remaining 4 bottoms below minus 100 in the last 35 months. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 3 accumulation days and 3 distribution days. Of the other indexes, both the Diamonds Trust and the S&P 500 Deposit Receipts ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Russell 2000 ended in neither accumulation nor distribution mode. Momentum. At Friday, 5/9 close, the daily CCI 20 gave us a zero-line reject short entry signal. At Monday, 5/12 close, the CCI 20 rose well above the zero-line reject pivot, so we exit the trade at Tuesday, 5/13 open. The result of this trade simulation was a loss of 52.06 points on the Nasdaq Composite, or 99 cents per share of QQQ. The CCI 20 daily ended the week without changing trend, and below the plus or minus 50 range for a valid zero-line reject entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend this week, while the CCI 20 daily began a Woody's downtrend 7 weeks ago. With 6 weeks below zero, the CCI 20 weekly at minus 67.75 is now in a downtrend, yet remains outside the plus or minus 50 range for a valid zero-line reject. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish, REITs continues in the top 5. Networkers has entered the top 5. Gold and silver leads the bottom 5. Computer hardware has left the bottom 5. Bearish, disk drives continues in the bottom 5. Brokers has entered the bottom 5. Semis has left the top 5. Focus this week, and an indication that the end of the dollar is fast approaching, www.zerohedge.com reports that foreigners sell a record amount of treasuries held by the Fed in the past week. And true to form, Zero Hedge has a chart that tells the story. Thank you for tuning in for this week's Santu Pirls Stock Market Commentary. Hoping that you've had a marvelous weekend, that you have a great week coming up, and wishing you true success.